Good morning, everyone. Today, I want to talk about the recent ups and downs in the Japanese stock markets and its influence to other global markets. In a dramatic recovery, global stock markets began to bounce back on Tuesday after experiencing significant losses in the previous sessions. This recovery was led by a remarkable surge in Japanese stocks, which saw Tokyo's equities jump up by 9%. The US and European markets followed suit, although their rebounds were more subdued. On Wall Street, the S&P 500 and the Nasdaq Composite each rose by 1%, partially recovering from Monday's 3% drop. The return of investor confidence was reflected in lower government bonds prices and the decrease in the VIX index, which measures expected market volatility. The VIX fell from an intraday high of over 60 on Monday to 27.7, indicating a return to relative calm but remaining above its long-term average of 20. Sebastian Page, head of global multi-asset at T. Rowe Price, commented, "A lot of Monday's market action seemed to be technical due to excess optimism in positioning and sentiment going into it. We might see these types of market as an opportunity to buy." Tokyo stock market led the global recovery with an impressive rebound. The Topix index, which had dropped more than 12% on Monday following an unexpected interest rate hike by the Bank of Japan, surged by 9.3% on Tuesday. The Nikkei 225 also saw a significant rise of 10.2%. This dramatic turnaround was so intense that trading in Nikkei and Topix futures contracts was automatically suspended during the morning session. Takeo Kamai, head of execution services at CLSA in Tokyo, noted that market volatility, stating nobody has experienced a market this crazy. The positive momentum extended across other Asian markets as well. South Korea's KOSPI rose by 3.3%, and Taiwan's stock index, which had suffered its worst sell-off in history on Monday, climbed 3.4% as major chipmaker Taiwan Semiconductor Manufacturing Company saw its shares increase by 8%. South Korean government officials attributed Monday's extreme reaction to US economic concerns and geopolitical tensions in the Middle East, promising swift action to stabilize markets in the event of excessive volatility. European stocks saw more modest gains, with the stock Europe 600 closing 0.2% higher. The recovery was cautious, highlighting ongoing concerns about the US economy in the short term. Charles Hall, head of research at Peel Hunt, remarked, "Although the scale of the reduction was exaggerated, the reality is that there is a bit more concern about the US economy in the short term." The global sell-off was exacerbated by the unwinding of the yen carry trade, where traders took advantage of Japan's low interest rates to borrow in yen and invest in riskier assets. The Bank of Japan's interest rate increase last week propelled the yen higher, triggering equities selling that culminated in Monday's decline. Analysts and traders struggled to pinpoint the exact causes of the ferocity of Monday's sell-off. Some suggest that algorithm trading programs responding to the yen's sharp upward movement might have intensified the volatility. Kiran Ganesh, a multi-asset strategist at UBS, speculated that there must be some forced or technical selling, as the fundamentals did not change by 11 to 12% in one weekend. As markets continue to stabilize, investors remain cautious, keeping an eye on central bank actions and global economic indicators. The recent volatility highlights the complex interplay of factors influencing global markets, from interest rate changes to automated trading systems. Thank you for listening.